Well, as I say, they're looking at the headline numbers. We've got things looking pretty steady, but it's that productivity number plummeting that's causing the main concern at this stage. It's certainly productivity that's been at the heart of the jobs theme for the longest while now.
Yes. Well, productivity is a leading indicator of employment. Companies, when labour productivity is falling, will lay off workers, and when labour productivity is rising, will employ workers. So we monitor labour productivity very closely to see what trends will be in employment going forward. Mm-hmm. So based on these figures, which are really very disappointing, we're not expecting employment to pick up to any degree before the final quarter of 2012.
It's disappointing, but let's take a look at how this productivity is actually measured here, because it's according to output per worker and attributing all output to workers then, as opposed to technology, where we know companies are looking to become a little bit more efficient in tough economic times and relying on technology, perhaps more so than they have in the past.
Yeah, the traditional way to measure labour productivity is to take all of the output produced and divide it by the number of people used to produce that output, which gives you an output per worker measure. But the problem is output is not only produced by workers, it's produced by capital equipment and machinery, information technologies and many other things. So we have used a technique to strip out labour's unique productivity. If you think about how this might work in a factory, a worker might become more productive because a new forklift or a new barcoding system has been introduced in the factory, but you actually should attribute that productivity to the system or the new equipment and not to the worker. So it's really very disappointing. We had a slight increase in labour productivity after the 2009 recession, but we've fallen back into negative territory.
So had it not been for these developments, we would possibly be looking at a worse scenario.
Yes, absolutely. I mean, it sounds simplistic, but really the economy during the recession or following the recession lost nearly 1 million jobs. And GDP didn't fall by very much. I mean, the implication is that the economy didn't need those 1 million workers to start with, because GDP did very well, thank you, without those workers. And that's the problem that we're facing at the moment, is how do we reintegrate nearly 1 million workers lost when actually GDP seems to be growing reasonably well without them.
Do you have any possible solutions that are being tabled at this stage to address the how-to?
Well, labour productivity, I think, goes back to the law, and I think laws and regulations have made labour in South Africa very unproductive. A poor performing worker faces no credible sanction in the workplace because of our very onerous dismissal protections. You've basically got to prove that someone is incapacitated before you can dismiss them for poor performance. And also our collective bargaining procedures are also very onerous, because they force wages to rise above the level of productivity. So if we could introduce a wedge so that, or a mechanism by which wages could rise commensurately with productivity, I think it would go a long way to the economy. But those solutions are not in store for us. I mean, labour laws and regulations are actually moving in the opposite direction. They're becoming more restrictive rather than less.
Absolutely. Well, we were chatting to Leon Lowe of the Free Market Foundation earlier this week, and he highlighted just that. And perhaps we need to start taking lessons from other economies globally that have gotten that right. Let's hone in on the employment numbers specifically here, because we're looking at steady employment, but distinctions still need to be made here, because we've got employment dropping in the mining, construction and manufacturing sectors still. So while some of the other sectors are offering some cushion, those are still areas of concern.
Yeah, the production sectors of the economy are weak, whereas the consumption sectors of the economy are doing relatively well. By consumption sectors, I mean retail and wholesale trade, as well as financial services. Something that I think is interesting is just how important the informal sector has become, and low-earning workers have become to the economy. I mean, if you look at the performance of companies like Shoprite, Capitec, African Bank and others, you can see just the dramatic growth that is occurring in the informal and semi-formal sector. This is something we've been observing in employment for several months, is that informal activity is growing. money supply, narrow money supply figures are growing, stimulating spending in the informal sector. So we've got this dichotomy between the consumption sectors, which are doing pretty well from the employment point of view, and the production sectors, which are lagging behind.
Implications as you see it for GDP growth moving forward, this current scenario that we face?
Well, I think a lot of the uncertainty around the economy comes from abroad, but it's not helped certainly by the fact that locally people are insecure in their jobs. So I think we can't expect to see really significant consumption spending growth, which is really the driver of economic performance domestically. We can't expect to see consumption growth until people start to feel more secure in their jobs. I think labour laws and regulations are going to be changed well into 2013. So I don't think workers are going to feel, or employees, who are also consumers, are going to feel comfortable for a very long time.
Yep, of course we're looking forward to the MPC's decision on interest rates this afternoon, and a broad consensus is that we're going to see rates being kept on hold. Loane, from your side, do you see a possible cut offering the economy any reprieve or the consumer any reprieve at this stage?
I can't see a cut. I think monetary policy has been very steady, and that's looking at interest rates only. If you look at the cash supply being pushed into the monetary system and into the economic system generally, monetary policy has been quite accommodating. So no, I can't see any cut at the moment. I don't. And also, some of South Africa's most pressing social problems cannot be addressed by interest rate cuts. I mean, unemployment requires some major political decisions. It's not as straightforward as waving a magic interest rate wand.